I was reading the most recent issue of BusinessWeek magazine, and I thought very intriguing. One of the articles in there was about how I was entitled, "Why the Obama Plan is Working." Now, my main take from this is that we have a tendency as investors and as humans in general to take information and we bring it through an emotional filter. You know, that filter is like a funnel, and what we do is we take information. If we tend to be the glass is half full type of a person, and we look for the positive information, what we'll do is we'll take that information, that positive information, we'll run it through that filter, and typically we will come out with something that tells us maybe that the market is going to go up. If I tend to be the glass is half empty, or if I tend to be more pessimistic, I will look for or gravitate to information that's negative that supports my point of view. Now, my goal as an investor coach is make sure that investors stay disciplined, because I know that we can't predict the future. We don't know where the market's going. 2/3 of the time it's going to go up, 1/3 of the time it's going to go down, and we really can't tell when. If we could, we would do that. We'd just stay in the market when it's going to go up and get out of the market when it's going to go down. Well, about a year ago, I was on Fox 17 with Charlie Chase, and we were talking about the Obama stimulus package. Would it work? And I basically said, here's my job. Talk to investors. I'm not going to talk about the political implications or how it's going to affect the economy or what the long-term implications. I'm going to look at how it's going to affect the market and how it could affect the market. And my point is that, you know what? Could it work? Yeah, it could work. What brought us out of the Great Depression? World War II. We bought airplanes that got shot out of the sky, and ships that got sunk, and tanks that got blown up. And, yeah, a stimulus package like that could work. And I'm not saying that World War II was wasteful in any way. We had to do it. But the thing is that it is one of those things that brought us out of the doldrums of the Great Depression. Well, back a year ago, people thought I might have been a little bit nuts for thinking that things could get better. But from that point until right now, at the time I'm actually preparing this and talking on this video, the market is up 105%. So investors that stayed disciplined, had worldwide diversification in their stocks, are up 105% in those stocks. Now, that leads me to the point of this particular video, which is this one paragraph in the article. It says, among those who own stocks, bonds, and mutual funds, they said in the article, only 3 out of 10 say that the value of their portfolio has risen since a year ago. That's really sad. What that tells us is that people took the information being taught a year ago in the media, they ran it through the emotional filter, and what they did is they ended up sabotaging their investment portfolios as a result of it, with this being the result. So we really have to watch the emotions. The best way to counteract the emotions is build up the cognitive, build up what you know about investing. And that's the point of our workshops, that's the point of these videos and the radio show. And I hope you partake in as much of that as you possibly can. We'll catch you next time.